Hello everyone and welcome to the channel. I'm Denny Trades and this is the Road to Funded series and scaling with Propams. If you're new to the channel, subscribe and give this video a thumbs up. In today's video, we'll be looking at my past week trading performance and we'll look at my trades that I executed and also we'll look at my trading journal. As you all know, I decided to start with the 5K prop farm account with the GFT or the God funded trader, and then from there we can scale. From there. So I started trading on this account on Tuesday. And at the end of trading week, I'm currently down negative 0.5% on this account, still on the phase one. So my win rate for that week is that 5%. And if you look at the trading calendar, which is off on this platform for the good funded trader, it shows that I started trading on Monday and I ended my trading on Thursday, which is not true because I had 4 consecutive trading days, and the first trading day was on Tuesday. So this PNL should start from this section right here. So I started trading on Tuesday. I had 2 consecutive losing days, and then on Thursday I had a winning day of about 7%, and then on Friday I closed down about negative 1.5% uh, on this account. So I'm going to be reviewing the trades I took that led to this PNL right here. So as you can see, the first 2 trading days, I was down to about 4.5%, and I recouped that 4.5% drawdown with this about 7% trading day. So with a 7% uh, uh, on this trading day, I recouped 4.5%, and I was up about 2% on this account on Thursday evening. So on Friday, I experienced a minor setback of about 3%, 3% on this account, which is about $150 if you factor in commissions. So I'm going to be reviewing my trades I took on this account. If you have watched the first video on this Road to Funded series, you realize that I recorded the first trades that I took on this account, and the result was not as I expected. I started with this trade right here, which was a 0.01 lot, and I targeted only 500 pips. With these 500 pips, I was already up 1% on this account. So the session was yet to open, as the session starts at 4 a.m. East African time, which on this platform it's 1 hour behind. So it's 3 a.m. on this trading platform. So the session opens by taking a previous short-term high on the left. Liquidity is grabbed on the upside, and then I had my entry, but my invalidation was right here. This is where I had placed my my stop loss, and inside this move up here, I started overthinking about this trade, how it was likely to fail and take this high, and so I ended up closing with a minor loss of about negative 0.5%, which is about $25. As you can see right here, it's about $29. My target was this relatively equal loss, which was about 600 pips. It was about 600 or 700 pips, and the risk, as you can see, the risk was 200 and about 250 pips. 250 pips and a 700 pips target, that's about 1:3. And since I closed at a minor loss, I was not able to capture this profit right here. So that's how I lost on the first setup, by simply not letting it run, submitting to the process, and respecting my first invalidation right here. So the price dropped and went to the target. I was still bullish on this pair. I was targeting previous day's high and this fair value gap, which is above this session open. So as you can see, price dipped inside these two relative equal lows. I took an entry, but the timing was wrong. I was stopped out, and then we had this leg up higher with a change in state of delivery right here, and the market structure shift after taking out this short-term low right here. So executed another buy trade, which I was stopped out at break even. But this is not in that video because I executed it right after I had stopped recording. So I was stopped out on this. My stop loss was below this low. You see, the problem I had here was moving stop, or either closing it manually like I did here. Right here I moved stop and I was stopped out to break even, but this move was not enough to put break even. So this retracement right here scared me, so I ended up putting break even and I was stopped out. And as you can see, the market didn't violate this short-term low right here. It went ahead to go up higher with a pip of about 1500 pips to the target. 1500 pips. So the position size on this trade was 0.01. So with a 1500 pips target, that would have been $150, which is about 3%. 3%. Uh, I had lost a percentage here, and I had lost half a percentage here, but I was up a percentage here. So this profit right here cancels this loss here. So here I'm down already. I'm down about $30 since this third trade was stopped out at break even. So I ended up missing out this. Since this trade I had executed with 0.02, the target would have been about $140, which is about 3% again. So I missed out on 3% on the shorts, 3% on this trade. If it worked out, if I had let it run to the target, I would be up 4%, 4% on that, 4% on that second trade. Even if I was stopped out on this trade at a loss, which is about 1%, I will be back to 3%. Then comes buys. If I didn't move my stop and this trade goes to profit of about 1500 pips, that would have been $150, which is 3%. So 3% plus 3% on this trade would have been 6% on this session only on Tuesday. That would have been 6% already, but that was the result of that trading day. So as we move forward, you see I didn't trade again until the next day. So market opens with the wick to the upside, then drops down and take this short-term low right here, and that is a pattern that you will see often, that always invalidates my logic, and I might get a losing trade if I don't act on that trade. So market drops and take this short-term low, and then trades up higher, closing above this fair value gap. This is a CB. So when price closes above this fair value gap, it gets inverted. It becomes an inversion fair value gap. So the buyers shift from bearish to bullish, and that's why I closed this trade. And after closing, I didn't switch up my mind first to think about going bulls. So this is a trade I ended up closing at a loss and also missing out on the momentum upside. So the session opens again at 4 a.m. Asia. My focus is always on Asia. Asia opens right here, and it opens with a retracement into this fair value gap inside these three consecutive down close candles. Three consecutive down close, or a series of consecutive down close candles, is an order block or a change in state of delivery once price crosses below the opening price right here. So once price closed above, this was a change in state of delivery to show bullish continuation. So price dropped inside this fair value gap, also inside this a series of down close candles, which was bullish, but I didn't again execute there. Since I was bearish, I was waiting for uh, a short-term high to be violated or to be raided. Then I was going to trade the momentum down, but you can see my bias was long, and so I ended up losing, taking a valid loss. So on this trade, I didn't make the first mistake I made, which was closing out manually. Even though I knew this setup had the potential of being a losing trade because of this consolidation and the fact that there's a candle, two candles right there that opened without a wick, showed that there was potential of this trade losing. And because I didn't want to violate the rules of my setup, which is I read on a short-term high for me to go short after session open. Okay, so I ended up relating this trade hit stop loss instead of closing it manually, and I experienced about a loss of about maybe a percentage. We reviewed the journal, and then after price had taken this short-term high again, I went short with confirmation, but then again the stop loss was hit for about a percentage. So I had two losing trades in that session. First entry and a re-entry after I was stopped out. My rules was that in that if I'm stopped out on the first trial, I can try again on the second attempt, and after that I stop. Uh, I simply stopped trading. So that was Wednesday. Wednesday I took a loss. We'll review the journal and I will tell you how much percentage I lost on Wednesday. So here comes Wednesday trading day. I didn't execute any other trade until Thursday. So Thursday was my most profitable day, and yet I didn't capture fully uh, the setups that this market gave on Thursday. So you can find a random entry right here that I won't factor in that one because it was a random entry. So the session opened about here. which is 4 a.m. East African time. As I said, this platform is behind with an hour. So the market opens at a premium and falls hard. This is not a liquidity sweep, it's a liquidity run. Market trades below a short-term low and continues to trade below it. So it means it's not a liquidity sweep but a liquidity run. So market offers a retracement inside this CB or fair value gap, and I get an entry confirmation targeting this short-term low right here. So I ended up taking a profit of about $80, which is about 1.5%. I got comfortable with that. I didn't uh, I didn't monitor price again, and as you can see, I would have a re-entry for continuation of this trade since the target was still the previous day's low and price had yet to reach the previous day's low. So I ended up missing out on this opportunity to scale on the shorts, which had a potential of about 1,000 pips. About 1,000 pips. Ended up missing out on that. So the session ends at 8 a.m. East African time, and as you can see right here, it had already formed the low of the session. So again, I get an entry confirmation of my model with two-stage stop out, meaning a short-term low gets taken and then the market still takes that short-term low that it had already created. It's kind of two-stage, one, two, and then end up high. So I would have my entry around this level, but I ended up missing out because of distraction. I was somehow on X and I ended up missing out even though I was still monitoring. That small distraction of about 10 minutes made me miss out on this trade. So when I came back, the market was retracing to this fair value gap, and when I saw this rejection, I executed with a small position, which I ended up closing because I was not confident with it. So this is the 2 hour uh, gap between Asia and London Open. London opens at 10 a.m., which on this platform is 9 a.m. since it's 1 hour behind. So London opens with a sweep above with two stage above this short-term high. I get my entry, but I then realize this market is likely to take this short-term high before it drops, which is the scenario I was expecting on Tuesday. On the first trading day, as you can see, as I have told you, that is what I expected. And I ended up closing at small loss, and that day it didn't take that high. It ended up going to take profit. On this day, it took that high, but I had already closed out at break even. So when price took this short-term high, I ended up going short with 0.04 lots and targeted about 400 pips, which gave me about $250, which is about maybe 3%. Remember here we already had, which is about 5%, and remember here we had a profit of about 1.5%. So on this day, on Thursday, I closed out with a profit of about 7%. 7% on this day. And even after closing this trade, you can see the market still gave me an opportunity to go short, but I was not monitoring price, so I ended up missing out on this setup. That was on Thursday. So on Friday, uh, the market opened with a gap up, then closing below that gap. This was the previous day's low. The market closes below it on 30-minute time frame, and then the first thing I do mark when I wake up is pivot point. So the first pivot point was around this level. Okay, so when the market gapped or closed below this short-term low, I was expecting it to reach to this pivot point, which is a support level. And then my expectation, if you can see my tweet on X, is that I was expecting this price to go to this a pivot point, which is a resistance level after forming Asian low. So the market opens. So I didn't execute on this short to capitalize on this movement to this support level. That's how I missed out on a potential of about uh, 700 to 800 pips. I didn't execute on that, and then price goes to the support level that I had marked, which is the pivot point, and closes above it with a change in state of delivery. Change in state of delivery is price trading above the opening price of down close candle. So I would have my entry confirmation on this candle after a change of in state of delivery. So I ended up not executing this because it was about a few minutes to session opens, which opens at again 4 a.m. So how the market opens at 4 a.m. is what discouraged me from entering this market, because it opened, didn't sweep above this short-term high, but instead had a high volatile wick into this fair value gap. I had no limit, so ended up not I didn't execute on that. It retraced. Also, I had no interest because it had not either taken a short-term high or even traded below a short-term low, even though it had entered onto this uh, fair value gap or BC. So retraced, closed above this fair value gap right here. This is a CB, so when price closes above it, it becomes an inversion fair value gap. That would have been an entry for longs to target this pivot, but I didn't execute. So I've already missed out on two winning trades on this day. This move down and this move up to this pivot point level from this inversion fair value gap, because it was already confirmed and I was monitoring price. So I ended up not executing on this trade and ended up on only tape reading. Tape reading is simply observing price as it goes. As you can see, I was still marking uh, my chart as the setup was moving. So 8 a.m. the session ends, and then we have that 2 hours gap before London opens. So London opens at 10 a.m., which is 9 a.m. on this platform, again because it's 1 hour behind. So we have an expansion high with above this Asian session high. Okay, price drops. I had a potential of about 600 pips, since I was risking about 200 pips. That is a good 1:3 risk reward ratio. Again, I ended up missing out on this since I was not monitoring. I was already fatigued from watching price the whole of this session, so I was asleep on this window, so I ended up missing out on that. Again, I was not on the chart when this market right after London opens. I was not on the chart when this market took a short-term low. and then had a change in state of delivery, and then a fair value gap. I was not here to execute this trade. So when I came, again, I don't know what I thought. I went short here, and I ended up closing at a loss of about negative 1.5%. And basically, that's my execution for gold on that week. The other pair I traded was Euro USD. So Euro USD, I had a setup on Friday that failed, and it ended up closing at negative 1.5% loss on this setup. I also had a setup that was a 2-hour winner, but I didn't close, and I ended up being stopped out at a full loss of 10 pips on a negative 1%. So this setup failed from a key level. I was targeting the next key level, but 30 pips from the here. You can see I was targeting previous day's low, which price failed to take right here, but it traded below a short-term low, which was already 20 pips. And since the risk was 10 pips, a 2-hour was already enough to end up at 2% on this trading day. But you see, shades happens on this chart, so I ended up uh, losing 1% on this trade. And then we started with this that I closed out on a negative 1.5% loss, which had the potential of closing at a break even since it had not violated this short-term high here where it's where my stop loss was. It was about 2 or 1 pips to hit the stop loss, which it would have not. I would have closed at break even since this momentum was no longer supporting bearishness. So those were my only trades on this account, GFT phase 1 challenge. And maybe next we look at maybe right now we look at my trading journal. So this is my trades journal. I journaled all the trades that I executed for that week, and as you can see, the first trade that we executed on 0.01 that gave us 1%. And on, as you can see on this column, I've written the notes that the I took profit at 1 hour, but the market went far ahead to 2 hour, which was 1,000 pips winner. But I ended up closing at 500 pips. So the expected would have been $100, but I ended up closing at $50, which is 1% instead of 2%. On the next trade, this is the trade that stopped me. I bailed out at a negative $29, and it ended up going more than 600 pips. So the potential or expected on this trade was about $120, which is about 2.5%, but ended up at negative 0.5% on that setup. The other trade I was stopped out. This was a market-driven loss after price took or traded below that short-term low where I had placed my stop loss. So I ended up at a negative 1% loss. That was a market-driven loss. I lost about $54. And then the last trade on gold on that day is this one that I was stopped out at break-even. Varied re-entry, I was stopped out at break-even. It went more than 1,000 pips, which we have seen it's about 1,500 pips winner. The potential on that trade was 100 to 150 pips, which is between 2 to 3%. And you remember that trade on Euro USD that went to R, but I was stopped out because I didn't take profit. I was stopped out at 1% loss. It was a 2% 2-hour winner, and this was a market driven loss because I didn't put break even. So the potential again on that trade was about 2%, which is $100, which I didn't I didn't secure that $100. So that was on Tuesday, 3rd February 2026. So on Wednesday, this is the day I had two consecutive losing trades on gold. So I was stopped out on the first on re-entries, which confirmed I had a wrong bias on this trade, and I didn't execute any other trade on that day. So I ended up with down on about 2.85%, which about 3% on that day. 3%. So comes on Thursday, where this was my best trading day for the week. I ended up with about 6.93, which is about 7% on this account. Remember, I didn't let the market run or capitalize fully on those opportunities on this day, but I still ended up with a 7% return on that day. 7% in a single day, that's a lot. So because I was able to recoup all the drawdown of $145, which is about 3%, and I was already up to about 2% on this account. I had recouped that drawdown and I was up to percent after this trading. Friday comes, I trade Euro USD and take a loss of about 1.5%, like we have seen on the MT5. Uh, Again, I go down into drawdown, a minor setback. I take gold trade and then again about a 1.5%, 1.39% loss, which takes me back to drawdown of about negative 0.5%. So this final trade on gold was valid market-driven loss because it was invalidated um, by an external, then internal, uh, external setup, which shows my bias was completely wrong, and so I deserved to lose. So I ended up the week trading at negative 0.5%. So if you see, if I had followed the rules of my trading and respected all my rules, you see I would be up about $600. I would have passed long time ago and started phase 2, since phase 1 is about 8%, 400. So I had already achieved 400 since this is 600 pips. But you see, the expected return and the actual return, those are two completely different results. But this is the reality of trading, and these are the raw results. So my plan for next week is to capitalize fully on my opportunities. I want at least the expected and the actual, even if they are going to be deviating, they don't deviate so much, uh, such that I pass this phase 1 challenge of the good funded trader program. So since I'm down negative 0.5%, next week I'll start with a 1% risk. I'll take a 2-hour trade, and the expected return will be 2%, which is $100. I will take two trades like that until I'm up 4%. When I'm up 4%, then I can risk 2% and aim for 4%, which will make the total return 8%, and I'll pass this challenge probably next week. And even if I don't pass, maybe I can aim for 5% for that week, and I'll be good to go. You can see on this journal I had 12 trades, and I was doing my math. If I just set TP at 1:1, every trade gives me about $50. Apart from these trades that didn't go according to plan, I will still be up $600, which is close to this expected of these trades. So this is assuming I was taking profit at 1:1, and this is the expected if I had traded according to my rules. So that's how my journal look like. I'm currently down at negative 0.5%. Maybe we spend the weekend reviewing this performance and then uh, touch the grass and probably come out sober next week to take advantage of the opportunities the market will offer fully. So thanks for watching this video. Remember to subscribe, give this video a thumbs up. Let's meet on the next update. Thank you.